good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to be embarking on a journey on how to find trading ideas using the OptionsPlay platform and how you can maximize your potential profits using the different types of ideas that you can generate from OptionsPlay. So every single Thursday, we're dedicated to helping you navigate the world of trading by empowering you to trade sustainably and confidently through these options education sessions. I see many of you already chimed into the chat window saying hello. If you're joining us for the first time, please feel free to introduce yourself, say hi, tell us where you're from. As you can see, there's a vibrant community of traders here every single Thursday learning how to utilize options in their portfolios, and our goal is to make sure that you have a well-rounded education across technical analysis, across option strategies to help you implement these strategies in your portfolio so that you can grow it sustainably in the long run. Now, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we see as example purposes during today's session. Now, what we're going to talk about first is we're going to talk about trading strategy types, help you understand what are the different types of trading strategies that you can find using the OptionsPlay platform. We're going to cover trend following ideas, and then we're going to look at counter trend ideas. We'll look at kind of the difference between the two, what type of setups that we're typically looking for within each of these types of scans. And I want to show you where you can find within the OptionsPlay platform. And then we'll basically end this with a live trading session. We'll go through the OptionsPlay platform. We'll look at some of the ideas that are presented by the platform together, and we'll open this up for Q&A here. Okay, but my goal here today is to provide you with how you can find daily actionable trade ideas that you can understand, and some of the foundational knowledge that we want to make sure that we build on is the fact that how to identify the best trend following and counter trend setups every single day using the OptionsPlay platform, and then how to structure an optimal option strategy to trade each trading setup using the OptionsPlay platform as well. So for those of you that are looking to follow along both on the slides and the trading platform, you can sign up for a free trial at optionsplay.com/signup. That will give you access to the platform that you can scan for the trading ideas that I'm going to show you during today's session. It'll give you access to the recording and slides when we post them on YouTube this weekend. But the primary thing I think for a lot of investors that are following along today is access to the trade ideas that I'll be showing you during today's session, how to find those trend following and counter trend ideas using our platform. You'll be able to have access to that for 30 days for free by signing up at optionsplay.com/signup, or just pointing your phone to that QR code here. It'll take less than 10 seconds to sign up, and you'll be able to get yourself started with access to the same platform that I'm going to show you during today's session. So let's start off by talking a little bit about the different types of strategies. You have trend following and counter trend strategies. And I think this is pretty intuitive as to what that means. Trend following, you're effectively going with the trend, and counter trend, you're going against the trend. Now, when we talk about trend following strategies, these generally have higher probability of success. And generally, in my opinion, it feels pretty natural to follow the trend because you're basically going with the natural flow of the markets and the direction of the markets. However, the type of characteristic of trading trend following strategies is that the risk to reward of trend following strategies tend to be a moderate risk to reward ratio. And that's because by definition, when you're following a trend, you're to some degree already late to the trend, right? Because it's already been established. It's easily identifiable by you and everyone else in the markets, and you're simply going along with it. You generally have a higher probability of success but a lower risk to reward ratio. And these types of strategies can trigger multiple consecutive signals over and over again, meaning you can get a trend following signal 1 week, a few weeks later get the same, get a similar signal in the same stock a few weeks later, and that can happen for a few months at a time, and in rare cases, it could happen, over a few years as well. Conversely, on a counter trend, when you're going against the trend, this is going to feel a lot more unnatural to go against the trend, right? Where a stock is moving substantially in one direction, and you're expecting it to reverse and trade in the opposite direction. These will have a lower probability of success, but because these are effectively very early to the trend, or maybe you're the first one to effectively establish a new trend, they have very excellent risk to reward ratios. You're going to have a lower probability of success, fewer signals, but very high risk to reward on these types of strategies. Does that make sense, everyone? Please type 1 into the chat window if the difference between trend following and counter trend makes sense to you. Perfect. So if we look at the difference between the two strategies, if we talk about trend following strategies first, just to give you an idea of kind of how we break this down, what we're trying to identify first is a primary trend. We're using a longer period momentum typically to identify that longer term trend. We're taking a look at usually technical indicators such as a momentum indicator, where we're looking at maybe 30 to 50 periods out. So we're taking at least 1 to 2 months worth of price action to determine whether a stock is trending higher or lower. So positive or negative momentum would suggest either a positive or bearish trend. And then what we're looking for is a pause in that overall trend. We're looking for either a shorter term momentum or sometimes a moving average that tells us that the primary trend has either consolidated or paused. And that's going to give us the signal to potentially look at entering that primary trend. And what we're looking for is a resumption of that primary trend. We're looking for a resumption of that primary trend. So we're looking for a moving average or short period momentum to reverse back towards the primary trends. And the way to think about this visually is if you have a stock that's moving higher, what you're looking for is a bit of a pause or some kind of a pullback where the risk to reward is more favorable to enter rather than entering a trade near top and hoping to chase it, right? Because stocks never move in one direction. They move higher, and they usually take a pause and consolidate before they continue moving higher. And what you're trying to identify is pullbacks like this to give you a better risk to reward for that trade entry. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. Perfect. Okay. So now, on the flip side, if you talk about counter trend, what we're looking for are trend extremes. Now, trend extremes are basically, every momentum indicator will tell you when something is technically overbought or oversold. Those are quote unquote price extremes. But we tend to find that if you just look at a single indicator, that's usually not enough, and you get a lot of false signals. So to identify a trend extreme, we usually look at both shorter and longer period momentum. So we'll usually look at something like a daily and a weekly chart. And what you want to see is a stock basically near overbought or oversold conditions, not just on a daily chart or not just on a weekly chart, but combined on a daily and weekly chart. Those give you far better trading signals. And what you want to do is and many times just finding an extreme level in itself is not enough. You need to find trend exhaustion. You need to see that and the reason for this is because many times you just have a stock that's doing incredibly well, and it's got strong momentum here on both short term and long term, and chances are it's going to continue to run in that overall direction. What you need to find is trend exhaustion. Signs that the buyers are starting to get exhausted, meaning there are fewer and fewer buyers stepping in, or as sellers, fewer and fewer sellers stepping in. And that is the moment at which you have the highest chance of that big reversal in the opposite direction. Not easy to identify, but we're going to show you kind of the template for how to go about doing that. And then lastly, I do think that for traders who really want to try to find the best trading setups, you want to also align with some kind of fundamental thesis. So understanding the fundamentals of a company will be incredibly helpful with that, because if you have identified a stock that you think is at an extreme in terms of high and you think it's going to reverse lower, well, maybe looking at some of the fundamentals, meaning look at what the valuation of the company is, look at the outlook that the company is providing from a guidance perspective, outlook on the industry, economic indicators. These are all things that can help you, give you some clues that something has reached a price extreme that's gone too far, and it's likely going to reverse in the opposite direction. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. Okay, perfect. So let's take a look at kind of the automated scans that are built into OptionsPlay to help you find these specific types of bullish and bearish trend following and bullish trend following and counter trend ideas. Okay, so I'm going to bring you here to the OptionsPlay platform, and what you're going to see here is in our trade ideas section here on the upper left-hand corner, you're going to have a list of different types of ideas. We have technical ideas, cover call ideas, credit spread ideas, and short put ideas. So for today, we're gonna focus on technical ideas. We're going to look at ideas that are generated by the platform based on technical scans. This is going to be those trend following and counter trend ideas. So what we want to do is typically, I like to filter or sort these by relative strength when I'm looking at any type of list of ideas. And then what I want to do is I want to filter based on liquidity. As a starting point, I'll look at only very liquid securities because those are the ones that I can trade options on. Occasionally, I'll look at somewhat liquid if, let's say, for whatever reason, when I'm looking through the liquid securities, I don't have enough names or I haven't found enough ideas. I might occasionally venture into somewhat liquid names, but largely I stick with liquid names. I typically will find that I'm able to find enough ideas just sticking to the very liquid names. I'll also remove small cap and media cap as well, and just look at large cap and mega cap. And then with that, what I can do is I can start looking at the ideas. So let's start off by just looking at, let's say, bullish trend following for 1 second, right? So if I'm selecting large cap, mega cap, liquid names that are bullish trend following, as you can see, I have 4 names that pop up during today's session. And I always like to sort these by relative strength because it gives me a sense for which stocks are the strongest stocks in the market, which stocks are the weakest stocks in the market. Now, whenever we look at trend following ideas, right? Let's look at Alibaba for 1 second. And you might notice some of these names in our Monday macro research report. You know, every single Monday morning, I publish a macro research report. We do a webinar on Monday mornings to give you an overview of where we currently stand with the broader markets. We also give you ideas during that session. And Baba was one of the ideas we presented to you this week. And it was an idea that was generated by the OptionsPlay platform. So the idea here with any of these trades is that what you're looking for is the start of a primary trend. As you can see, it started with this bullish trend here back in late July, early August. We started trending higher here, and what we're looking for are pullbacks here. Sometimes these pullbacks are pretty small, but they're pullbacks nonetheless. And these pullbacks provide you with, from a risk to reward perspective, some of the more attractive entry points for this bullish trend, right? And that's exactly what we've gotten here over the past couple of trading sessions, and we're looking for that continuation higher here for Alibaba. Now, when we look at Alibaba here, what I typically want to look for in these trend following ideas is that I want to get in relatively early in the trend. So sometimes you might find yourself, and I don't necessarily have a good example of this at the moment, or maybe I'll find one here in 1 second. Maybe something like, let's look at Zoom for 1 second, right? A stock that has recently run a lot, maybe pulled back a little bit. I want to make sure that I'm relatively early on the breakout, on the pullback here, and looking for that continuation. I don't want a stock that has already been running for 2-3 months, has made new highs for the last 2-3 months, and now I'm getting into a trend following trade. If you're going to get into a trend following trade, you want to try to identify one that's relatively early in its trend. And I think Alibaba is a good example of one. It just turned bullish a couple of months ago when it's trading, about a month ago when at the time it's trading around $79, $80 or so. And right now it's back at that exact level, that breakout level, which makes it, from my perspective, relatively early. And if this is a long-term bullish trend, we're relatively early in that trend. So that's typically some of the things that I look for in a name like this. Does that make sense, everyone? Please type 4 into the chat window if that makes sense to you. So, just because you have 4, 5, 10, 15, bullish trend following ideas, they're not all the same from the perspective of some of them are pretty early to the game and some of them are much later to the game in terms of finding that trend. And what you're trying to do when you're looking through these ideas is, if you sort by relative strength, the ones with the lower relative strength are more likely to be earlier in the trend. And then the ones with the really high relative strength are ones that are likely going to be slightly later in the trend, or stocks that have just been performing incredibly strong. So as you can see, this is Coupang, a Chinese insurance company. This is a stock, even though it's been trading sideways for quite some time, this has been, I would say, trending higher here for quite some time. It's consolidated for a long time here, and maybe now it's ready to continue. So this is maybe, I think, from my perspective, but Alibaba certainly fits into the category of potentially being early in that overall trend. So that's kind of what I'm looking for in a trend following idea. And that's really where I can start looking at, how do I place a trade like this using OptionsPlay? And, for any of you who's ever pulled up an options chain, there's a lot of work that needs to be done in order to select the right expiration date, the strike price, the strategy. So what we're trying to do is basically help you do that initial work of figuring out what option strategy to choose, what expiration date, what strike prices to choose. It does all the work for you by simply presenting you 3 bullish strategies to get you started with the a bullish thesis on Alibaba. So you can buy 100 shares of the stock, which will cost you about $8,100. Buy a call option will cost you $450, and buy a call spread will cost you $335. And the goal here is to show you, if, let's say, the stock does, let's say, reach, let's say, a new high, let's say it goes back to, let's say, $86, $87, right? It allows you to model that outcome and see which one of these strategies will give you what specific type of outcome. So if you bought the stock, you're looking at about a 7% return on the stock. If you bought the call option, you're looking at a much nicer 55% return on the stock. And then if you were to buy the call spread, you're looking at about 109% return on the stock. And this is really what you can do to model these types of ideas and see which one best suits you, so that you can better understand, okay, out of these 3 strategies, which one might you use? In this particular example, I might use the call vertical spread. And at the same time, you should, more importantly, model what happens if the trade doesn't go in the direction I expect it to. Which is, I think, many times a more important question to ask on these types of trades. Not necessarily how much money can I make, but how much money can I potentially lose? Because we all have finite amounts of capital to risk on a trade. We don't have infinite amounts of capital to risk. So we have to always make sure that we are comfortable with the loss potential on a trade. And more importantly, we have a risk and investment calculator that you can use to calculate the appropriate number of contracts. And when you use that first with a risk and investment calculator, you can get more accurate expectations. So for example, if you think the stock's going to reach, 87, here, as you can see, what I'm doing is I have a maximum risk of $2,000 on this specific trade. So if the trade goes up to 87 and I buy the appropriate number of contracts based on my account size, I'm looking at about $1,800 worth of profit on this particular trade risking about $2,000 if the trade doesn't go in the direction I expect it to. So I'm risking $1,675 to buy 5 contracts of this. And if it does work out in the direction I expect it to, it reaches 87, I'm looking at $1,800 worth of potential upside. So this tool is designed to help you quickly identify trading opportunities and then quickly structure an options trade and decide whether an options trade makes sense for you. In this particular example, I was able to find an option structure that I think makes a lot of sense here. I'm looking at about 109% return if I'm correct on this specific trade, and would be, I would say, fits within the risk to reward metrics that I would be expecting on a trend following strategy like this. Now, sometimes you might find that based on your target price, in this particular Alibaba example, let's say you think it's only going to go up to 85, for example. Well, now you're looking at only $825 worth of profit versus what is roughly $1,600, $1,700 worth of risk. In that particular example, I would say not worth your time, right? The risk reward is just not strong enough to justify risking $1,600 just to make only $800. So this is really where you have a little bit of judgment in terms of what your outlook is. But with trend following ideas, what you're expecting is that trend to continue. And that would mean that you would continue to make new highs, right? As you can see, we've made a series of new highs. Each time it was a couple of bucks higher. And what we're saying is that we think that that might happen again, right? Get up to that $86, $87 level. And if it does happen, I think that justifies the potential risk that you're taking here. But the goal here is to try to make your ability to find an idea and structure an options trade all done in just a few clicks without having to pull up an options chain, without having to figure out what your starting points are. Now, you can always adjust these strategies, right? You can adjust the strike prices, you can adjust the expiration dates, you can make the vertical spreads narrower or wider. There's a lot of different choices that you can make to modify these strategies if you find that you've got the right trading setup, but you want to make some modifications to it. You absolutely can. You can change the strategies. But the goal here is to give you a very quick overview so that within a few seconds, you can have a good grasp as to whether or not this is worth exploring further, or you should move on to the next idea. Because on any given day, you're going to have a lot of different ideas that you can sort through. Let's take a look at Pfizer. I'm going to stick to names that I think most people are familiar with, right? Pfizer, bullish trend, pulled back here, satisfies the requirement of a potential continuation here. Now, this is a good example where I think that, realistically, I think that if it does resume that bullish trend, I'm looking at a resumption back to the highs, which is around 3150, right? So 3150, I think, would be kind of the upside target that I have on this. And let's use our risk and investment calculator and collect the appropriate number of contracts here, meaning I can buy 15 contracts to trade $2,000. Let's go back to our risk and investment calculator. If I were to risk $2,000 and the stock reaches back to that 3150 level, which is kind of the highs from the end of July, I'm looking at about $2,500 worth of profits, or 132% return on the capital at risk. And I think in that particular example, that would be a pretty good return on the capital at risk if I were to put on this Pfizer trade, right? And this is just using the default debit spread as a starting point. You can very much start looking at variations of strategies using credit spreads, or even just simply buying a long call option. Even if in this particular case a long call option looks pretty attractive here as well, 127% return versus 132. So the risk and reward of these two strategies are very similar. And let's say Pfizer instead, maybe goes back down to 27. If it doesn't work out, how much are you risking here? As you can see, the two are very similar in terms of overall risk. So in this particular case, I would say it's a bit of a toss-up between just simply buying a call option or buying a call spread. So if let's say you're a beginner in options trading, you're not quite familiar with the spread, maybe you don't feel comfortable with the rules for how to manage a spread or managing a spread trade, you might find that the single leg option is best suited for you. You can easily do that using the OptionsPlay platform and looking at the two different strategies and seeing which one best suits you. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Okay, so I mean, we can take a look at some bearish opportunities as well. We can take a look at a few bearish opportunities as well, but largely a bearish trade is really just a mirror image of the bullish trade. So let's take a look at bearish trades very quickly. As you can see today, there are 30 bearish trend following ideas. So far more bearish trend following ideas than bullish trend following ideas. So when we look at bearish trend following ideas, the one with the highest scores are the ones that are more likely early in an overall trend, right? So we've recently highlighted Oracle and Robinhood in our Monday morning macro research. So let's take a look at, let's say Robinhood, for example, right? The ones with the highest strength, meaning these are the strongest stocks in the market, right? If you look at this stock, you know, Robinhood has had a very nice run from the end of last year from $7 to $25, and now is starting to break down here, right? So what we're basically saying is that this started a bearish trend back here in late July, right? Broke down very heavily with the rest of the market, rally all the way back up to call it a resistance level, and it's now getting rejected here. So the risk to reward is incredibly strong here to enter a bearish opportunity, right? So again, you know, we use this scan to find those Monday morning research ideas that we present to you every single week. And you can use kind of the OptionsPlay trade to now structure a bearish strategy, buying a put option, buying a put spread. Maybe you think it's going to resume back to, let's say, 16.5, which is the level down here, right? Maybe you think that's a reasonable downside target for Robinhood, 16.5. We'll always use our risk and investment calculator first so that we calculate the appropriate number of contracts. Go back to risk and investment calculator. If it reaches 1650, I'm looking at about 128% return if I bought the put, and 158% return if I bought the put spread. Vice versa, if let's say Robinhood continues its bullish trend and gets back up to 25, how much am I risking? I'm risking $475 if I short 100 shares of the stock, $1,900 if I bought the put option, $1,914 if I bought the put spread. So risk-wise, the two very similar, and if it does move in the direction I expect it to, what did I say? 1650, I think was my target price here to the downside. I'm looking at about 128 to 158% return. Given the same amount of risk, I think I obviously choose the one with the higher return, 158% return over 128% return. So this would quickly give me a way to find trading opportunities. Like I said, when you're looking for these, you want to find opportunities that are earlier into the game. And the best way to do that is to sort your trading ideas based on relative strength, because the ones with the strongest stocks are the ones that are strong now and just starting to turn lower here. I'll take a look at one other one. Let's look at Bank of America. You know, we highlighted Citigroup earlier this week, but Bank of America very similar in terms of price action. So you see how long the stock has been in a bullish trend for. You know, this went from $24 to $45 in the span of, you know, call it 8 months or so, right? Big run. And now it's starting to show some signs that that bullish trend is starting to end, right? You've got this support level that was broken here, and that's when trends started to turn bearish. But you don't want to chase these bearish trends. You want to wait for that pullback, because that's your opportunity to get a much better risk reward on a bearish trade, right? So this is kind of why our tools help you be far more patient in identifying these trading setups, so that you are entering at what is the best possible risk reward. And what that means is that, let's just say you take a bearish trade on Bank of America, right? If you're patient and you wait for these trading setups, and Bank of America over the next couple of days starts to drift higher here, gets into that 41, 42 level, that's all you need to basically say, you know what, this trade didn't work out the way I expected to. I thought it was bearish, but it's clearly broken back above its resistance levels. It's turning bullish again. Let me get out of this trade and cut my losses, right? What you want to do is you want to enter trades where the stock doesn't have to move very far before you can say, hey, I'm wrong. I want to get out of a trade and get out at the smallest possible loss. What do I mean by that? Let's say today is August 29th. Let's say by mid-September, the stock has drifted higher to, let's say, 40, or what do we say, $42, right? What you're risking here in this particular case is 50% of the premium that you paid. This way, you're not risking, in this particular case, $2,000 on a trade, right? If the scenario that we just said at $42 halfway through by September 13th, the stock has drifted higher here. Instead of risking $1,900, you're only risking $980. The more you can set up trades where you're entering as close to the most optimal entry point as possible, the less you're actually going to risk on the trade if it doesn't work out, right? So this basically allows you to basically find the opportunities that are most optimal, hopefully enter them at some of the most optimal times to enter, and structure a trade where you're risking less, potentially make more utilizing options. I see a couple of questions about entering these trades. Well, one of the things that you can do is you can connect this to your TradeStation account and basically trade these trades directly into your TradeStation account if you have a TradeStation brokerage account. If you don't, you can open up a brokerage account to be able to trade directly from our platform. We are looking to expand that brokerage integration to other ones such as Safety Trade and Schwab. Or you can enter it into a paper trading portfolio for those of you that are brand new to trading. If, let's say, you've never traded a vertical spread before, you're just exploring these strategies, you can enter these trades into a paper trading portfolio, and you can track it into our portfolio tool just like you would with a live portfolio, a paper trading portfolio, and see how they do. Or you can track, so for example, like our daily play portfolio using the portfolio tool. We send out trade ideas every single week, multiple times a week, to give you trading signals. You can use those trading signals to track these portfolios using the portfolio tool as well. So this is all available to you here on the OptionsPlay platform. Okay, so now let's quickly turn our ideas to counter trend ideas. Let's look at some bullish counter trend ideas. So these are stocks that are severely oversold, that have a high bounce opportunity. Now, we obviously had PDD in the news this week because they reported earnings and the stock is down something like 20-something% in just a couple of days, right? So stocks that are kind of severely oversold are the ones that have a high bounce potential to kind of rally very quickly, right? That's the stock is up nearly 5% today. You look at Intel, severely oversold, up 2.5% today. Mobileye, severely oversold, up 4% today. You know, stocks that are severely oversold are the ones that have the highest bounce potential, and you see these all have relative strength of 1 or 2. The ones with the poorest relative strength are the ones that are so oversold that have that high bounce potential. Now, a lot of people look at this chart and they'll say, no way will I ever buy a chart that looks like this, right? But you really have to, think about trading from the perspective of, like, what are you ultimately trying to do when you're trading? You're trying to buy low, sell high, right? How do you buy low? You can only buy low when the stock is basically in the toilet. And I know that that's perhaps an oversimplification of trading. However, that it's true. The more oversold something is, the more attractive it might look from a valuation perspective, and more attractive it might look from a technical level perspective. So this is trying to help you find opportunities that fit that scenario. Now, I will say, counter trend trading is not easy. It requires a little bit more research than trend following ideas. Trend following ideas, you can get away with just looking at the technicals, in my opinion, many times. with just maybe a very brief or surface level understanding of the fundamentals. I tend to find that if you want to be successful at counter trend trading, you need to have a good understanding of the fundamental outlook of a specific company to justify, effectively what some investors will call catching a falling knife, right? Because it feels like you're catching a falling knife, and trying to pick stocks that are near its very bottom is incredibly hard to do. So one of the things that we do typically look at is exhaustion. What do I mean by that? Now, this doesn't fit the bill here. What you're looking for are stocks that, I'm going to see if I can find one here that does fit the bill. I don't know if any of these are. Most of these kind of have declined on earnings. But the idea is you want to find positive divergence for a bearish trade. What that means is that a stock is making lower lows in price. I think Mobileye probably fits this scenario, right? The stock is continuing to make lower lows in price, but notice that momentum is no longer making lower lows. This is a good sign that sellers are getting exhausted, that there are fewer and fewer sellers continuing to sell the stock, and that there's a higher probability of that bounce higher here. What would be a reasonable target on a bounce higher here? Well, you've got a gap fill here at $20. You've got a big gap here at $20 that remains unfilled. That could be your initial upside target. That gives you a lot of potential upside with very minimal risk. A lot of people will say this sounds very risky, but this is the exact opposite of a risky trade, because the stock wouldn't have to decline very much before I would say, I clearly did not identify the right turning point, clearly continuing to be a bearish trade. Let me get out of this trade, right? So it's 13.5 right now. If this continues down to 12.5, I'd say, you know what? Clearly where I thought it was going to start bouncing higher here wasn't the case. Let me get out at a very small loss, right? So for example, let's structure this trade again. Let's use our risk and investment calculator. I'll calculate the number of contracts, go to our P&L simulator. So I said that if, let's say this goes down to 12.5, but let's just say $12, for example, right? Let's say it goes down to $12 by, I don't know, at the end of next week, right? What you're trying to do here is to understand how much you could potentially lose on a trade if this doesn't work out the way you expected to, and being able to, how much risk that you are going to risk on the specific trade versus how much you can potentially make if the stock does reach kind of your upside target here, right? So here, if you bought the call option, you're looking at 324% return on your trade. If the stock declines to 12.5, you're looking at risking about $1,000, right? So in this particular case, I think that if realistically, if you think that the stock can get up to $20 by expiration, you're looking at a 300% return by buying the call option, while you're risking, I think, what was it, about 60% of the call option if it gets back down to $12 or so. So it doesn't necessarily mean that Mobileye is the best trading setup, right? I honestly don't think it is. But this is how you can use a tool like OptionsPlay to quickly identify what your potential risk is versus what your potential reward is, and being able to quickly determine whether or not this is something you want to explore further, maybe explore other strategies. If maybe you think the call option isn't the right one or the vertical spread isn't the right one, but you want to explore some other strategies. But the idea is so that within a few seconds, you can identify a trading setup that's optimal, meaning an oversold stock that's exhibiting signs of exhaustion here, and you're looking for a potential way to trade that. Right, and let's just flip this over to the bearish counter trend. Right, these are the strongest stocks in the market. And if you look at this list of names, you might recognize some names that we recently have put out research on. Lind, which is one that we recently put out research on a couple of. This was probably about a month ago. Ferrari is another one that we recently put out on bearish trades on. I think those are the ones that I see on the list here from today. But we use this list very often when we're trying to find trading opportunities that are counter trend, because it's the only platform that I know of. Most platforms will allow you to scan on technical indicators using one time frame, right? So you can kind of write all the types of logics that you want across one time frame. Most technical indicators don't, most platforms that, if you're writing your own custom scans, it's hard to scan across multiple time frames at once. But that's exactly what our platform does. It's scanning for both daily and weekly charts. So we're looking for oversold conditions, not only on a daily chart, but also oversold conditions on a weekly chart. So something has to be both oversold on both weekly and daily first to be able to meet the criteria. And then what you typically want to look for are stocks that exhibit some form of exhaustion here. So let's see if I can find one that does look exhausted here. Let's look at, I think Lind, nope, that doesn't meet that criteria. Clorox, here we go. So here's what we've done, right? We've made a higher high in price, yet momentum no longer confirms those higher highs. We also have, you can call it a triple top here around this 155 area, right? Potential reversal area. And, this is the prime example of a great trading setup, because if this were to be a true top of Clorox, right? If 155 truly is a top here for Clorox, like downside potential is pretty substantial here. Just to get back to this initial rally here, that's down to $140. To fill this gap here, that's about another $7 or so. So you're looking at about $22, $23 in target downside target. So 15 on the conservative side, 22 on kind of extended targets. How much am I risking to try to make that $15 to $22? Well, because of this triple top, if Clorox got up to 157, 158, I'd cut my losses and get out. So I'm risking $3 in upside versus where I'm looking at $15 to $22 in potential reward in the downside. That's a really strong risk to reward ratio. That's why it's so important to enter these trades at the most optimal times, because a lot of people find these counter trend trades really counterintuitive. They find it very difficult to kind of pull the trigger on a stock that looks very bullish. All momentum gauges are turning positive. Why would you possibly go bearish on it? Like I said, it's not easy to do, but when you say the concept of buy low, sell high, you can only buy low when you actually wait for when things look so dire that no one else wants to touch it. That's when you're the buyer, or vice versa. When things look so positive, everyone looks like they're buying, you're the one selling. That's the only way to take kind of these reversal points, right? Like, how can you possibly be a buyer down here when if you had looked at this chart back here, let's just if you were looking at a chart like this, you'd say, oh, this is a stock that's heading lower, right? Well, this is, maybe this didn't actually end up triggering a buying opportunity, because as you can see, we made a lower low, momentum made a lower low. That didn't satisfy the requirement to kind of be a buyer there, right? But let's see if we find another one. This one did you made a lower low in price, momentum no longer made a lower low. And as you can see, you got a really nice bounce here after what looks like a stock that was very much in the toilet and was heading kind of to zero, right? How can you be a buyer of a stock like this? Well, you have to have the right tools to help you identify these extremes, and then looking at some other tools, such as when there's exhaustion here. And that's exactly what we're getting here on Clorox right now, right? Higher highs in price, exhaustion on both daily and weekly charts, and that negative divergence. That gives me a higher probability of that pullback. Now, like I said, what I will also do in addition to that is I want to look at the fundamentals, right? I want to look at kind of where Clorox is trading from a valuation perspective relative to its peers. And I typically need to see that last component, an overvalued stock with kind of the overbought and the conditions that I'm expressing here right now, the negative divergence, the overbought conditions, and a overvalued stock to justify taking a short position in Clorox. And that's what our Monday morning macro research does exactly, right? We identify stocks that we have found using this list of stocks where we've done the research. We've kind of gone through this whole list. We've looked at stocks that are overbought, that are exhibiting that negative divergence, and are overvalued. Those are the ones that we pick in our research that we present to you every single Monday morning. And we're actually in the process of improving that and putting those types of trades out multiple times a week, not just on Monday mornings, so that you are getting these ideas from us multiple times a week, not just on Monday mornings. So, we've made these changes to our OptionsPlay platform recently because we've simplified our trade ideas recently to make them a lot more intuitive, right? Counter trend, trend following, and I also recently did a webinar on these CCI scans as well. That's another scan that I use. That's also a trend following scan, but those all fall under a trend following opportunity as well. So that's kind of how we would use the tools that are available to you here at OptionsPlay to help you find trading ideas and quickly structure an option strategy on the back of that. So, for example, if we're looking at Clorox here, I would look at buying either a put option or a put spread by always using the risk and investment calculator first. The risk and investment calculator helps you stay in your lane with regards to the overall risk that you take so that you never trade something that exceeds your risk tolerance. And then you use your P&L simulator to say, what happens if this gets down to, let's say, 140? What is my potential profit on the specific trade? 300% return on the put spread, the put, 177% return on the put spread. In this particular example, I'd probably buy the puts. I'm looking at a potential $6,000 return on my roughly $2,000 risk if it gets down to 140. This is a stock that went from 140 to 155 in the span of 2 weeks. So in 50 days or so, do I think it's a reasonable target to get back down to 140? I think that's not a crazy target price here to the downside to get down to 140 by mid-October. So a 6,000% return, very much in the potential opportunity here while risking $2,000. So, when you trade counter trend, you have these much stronger risk to reward ratios on these types of trades. They're obviously harder to find. They take a little bit more research, but they can potentially pay off much, much larger returns than when you're following the trend. So, we'll continue to put out research on both trend following and counter trend ideas on our Monday morning research. We'll continue to use them in our daily play trade structure in the daily play ideas that we publish to you. And you'll continue to hopefully learn from us as far as how do you identify these opportunities and trade them using our daily play service. With that covers what I wanted to share with you here today. Hopefully this gives you a pretty good understanding of kind of the new trade ideas that we recently published in OptionsPlay. They're actually what we basically have done is we've taken the existing trade ideas that we used to have and we've organized it better for you into those counter trend and into trend following ideas. The idea is that we wanted you to be able to access the same ideas that we used to access, but do so in a way that's a lot more intuitive, right? We didn't want you to have to sort through all of the different trade ideas based on technical indicators, because I tend to find that the technical indicators didn't mean so much to a lot of people, whether the trade idea was generated off of an RSI indicator or a money flow indicator or stochastics indicator. It didn't really matter to most people, right? Which indicator it generated. It's really more of a matter of what the type of strategy is, right? Are you following a trend or are you trading counter trend? Because that means a lot more to traders, because that's really how you identify the trading setup, whether you like the trading setup or not. So by reframing your thought process of trading ideas into these two categories, you're going to find it a lot easier to navigate the trade ideas that are presented to you in the OptionsPlay platform. And we're also in the process of making this selection of, finding your scans and selecting the sorting and filtering the scans a little bit easier. We'll release that out next week. I saw a couple of comments saying I can't select these trades because basically by selecting it, you're kind of deselecting it. We're making this a little easier for you to navigate so you can quickly get to the type of scans that you're looking for. We're making the navigation of sorting and filtering a little bit easier for you. We'll move the scans to the top of the list so that you can easily scan based on, or you can easily filter based on the scan. So that's coming out in about a week or so. But in the meantime, you can still use this. Look for the type of trades that you connect with, right? I tend to find that traders prefer following the trend or prefer being counter trend. Now you can kind of just find the ideas that align to you or the thoughts that you have for that day. So with that, that covers what I wanted to share with you here today. Just a reminder, if you want access to this platform, if you haven't signed up for an OptionsPlay account yet, you can do so by clicking on the link on your screen, optionsplay.com/signup, or point your phone to that QR code. That'll give you access to the OptionsPlay platform. It'll give you access to the recording and the slides, all on the when we post it on the YouTube channel this weekend. So with that, what I'll do is I'll open this up for Q&A. If you have any questions, there's a Q&A window at the bottom of your screen. Please type your questions in the Q&A window, and I'll try to answer as many questions as I have time for during today's session. There's a question about what is the bottom plot. So the bottom plot will give you it's the indicator that it's generated off of. So if you move your mouse over, as you can see, it'll tell you that's a CCI. So any type of indicator that you have on a screen. So if you simply hover your mouse over, it'll tell you what the indicator is. In this particular case, it's CCI, the Commodity Channel Index. You haven't mentioned what strikes and expires you choose for your trend trades. I have. So, the OptionsPlay platform will help you automatically identify the expiration date and strike prices of each of these strategies. You just select the idea. It'll automatically select bullish and bearish for you based on the idea. But you can easily use the tool to help you identify the strategy, the expiration date, and the strike price. Someone's saying that they can't select the scans. So, when you use the scans, basically, if you select it, it'll basically, when you select it, it's like a toggle, right? It's like a toggle on and off. So, you can basically toggle all of them off and just select bullish counter trend or bearish counter trend or, trend following. Like I said, this sorting and filtering, we've already worked on improving that a little bit easier for you to navigate, and we're pushing that out next week. So you'll be able to have an easier time navigating these scans by the time we push that out next week. There's a question, what is the CCI dip in bullish trend and CCI rally and bearish trend? These are just trend following trades. We're in the process of maybe making that a little bit clearer as well, but let me just show you kind of the dip in bullish trend. It's the same thing. It's a trend following trade, right? Basically, you have a stock that's trending, pull back here, and you're looking for that trading opportunity. It's just a different technical indicator that generates these trend following ideas. It's also a very powerful one. I recently did a webinar on trading trend following ideas, and I laid out this specific CCI dip in bullish trend scan and what that means. It's one that I've used in my trading in my 18 years. I've used the exact same scan, trading futures, trading equities, and you now have access to that scan using the OptionsPlay platform. Why are some options play scores circled in brown? So the color coding of the options play score gives you a sense for the expected outcome of the trade, meaning based on the probability and the risk reward of each trade. We're basically looking at these three metrics: max risk, max reward, and probability of profit. We're basically saying based on these, especially when you have unlimited reward, right, or unlimited risk, it's impossible to calculate risk or reward. So we basically found a way to basically calculate a reasonable risk or reward weighted by the probability and give you a good sense for what is the expected outcome of that trade. Red means you have a negative expected outcome. Brown or yellow is kind of a neutral expected outcome, and then green means a positive expected outcome. So red doesn't mean that you're going to lose money on the trade. It just means that you have a lower probability of success on the trade, because the direction of the trade has a large influence on the outcome of the trade. But basically, this is saying that if you trade this 100 times over and prices exhibit kind of normal distribution or log normal distribution, this is kind of you have a negative expected outcome on the trade itself. Why use CCI over RSI? Well, I mean, we've done a lot of back testing of this technical strategy, and CCI just simply performs better than RSI in many instances. For bearish plays, are they naked puts or stock covering? So when you're talking about bearish plays, we're long puts and long put verticals. So we're not selling options in this particular case. So you're not talking about naked puts. Naked puts is referring to when you're selling a put option, or covered stock is typically when you're talking about selling options. We're buying options here. So it doesn't matter. You don't need to own the stock when you're buying an option. Does it also include sector ETFs and indices? Yes, it doesn't. You will see ETFs make this list. So there are ETFs on this list. I don't see one at the moment. Actually, if we just simply let's see. But yeah, there are ETFs that trigger these, like ARK, for example, right? That's an ETF. So this covers both ETFs and stocks. So ARK is one, JETS is another one. There are definitely ETFs, PSQ, QID. These are all ETFs that you can trade. DJX, yeah. So XLK, as you can see, there's lots of ETFs in this list as well. How do you link the brokerage account? So you click on trade, connect to TradeStation, and it will take you to connecting your account. So you can click on your live account, click on connect. It will bring you to a TradeStation sign-in page. Put in your user credentials at TradeStation, and that will automatically link your TradeStation account in OptionsPlay. Alan, regarding your question with Fidelity Investments, send us an email at info@optionsplay.com, and I'll happy to kind of help you understand what that future partnership might look like. Any other questions? Jeff is saying when it selects the strikes for, say, a spread, is it selecting strikes as a function of the size of the moves that the tool thinks are realistic? Yes, that's correct. So, why is it choosing the 45 by 35 put spread on ARK? Why is it buying the 45 and selling the 39s? Well, it's really looking at the reasonable trading range for that October 18th expiration, right? So as you can see, the one standard deviation move is down to $39. That's where we're selling the 39 strike. We're basically, you want to find a balance of a strike price that you're going to collect enough premium to offset the cost of the trade, right? So if I just bought the 45 put, I'm spending $225. If I sell the 39 put against it, I'm basically, in this particular case, collecting nearly 50 cents in premium, right? So that's enough premium to offset a pretty substantial percentage of the risk that I'm trading. So instead of risking 225, I'm risking 178. There I'm saving nearly 20% of the premium, or 20% less risk using the vertical spread than the put. However, when you sell a put, you're also limiting your potential reward on the trade. So what you want to do is you want to find a strike price where you're not limiting your potential reward by very much, because even if the stock reaches kind of a reasonable downside, right, you're looking at you're looking at a higher return using the put spread versus the put option. So it's a fine balance here. So that's what we're doing. We're automatically finding the right strikes for you to buy a spread on. Great question, Jeff. Will you ever do IBKR or a toss? So toss is definitely far more likely than IBKR first, just because Schwab is far more of our customers trade at Schwab. So Tasty Trade and Schwab are the two that we're looking to do next in terms of a trade integration. Will the same idea structure be available for all markets? I'm not sure what you mean by all markets. If you don't mind clarifying for me, that'd be great to understand. Any other questions? Yes, we are looking to expand this out to both Canadian and European markets as well. Okay, with that covers all of the questions that we have time for here today. Thank you so much, everyone, for your time this afternoon. I hope that this was helpful in giving you a better understanding of how to use the OptionsPlay platform, whether you are just starting out and checking us out on a free trial, or you've been a member for years. Ultimately, every single day, what you're looking for from your platform are ideas that are actionable, ideas that will generate potential profits for you. And what we want to do is we want to try to reorganize the ideas that are available to you on the platform to help you find the best trading setups. And like I said, the relative strength is probably the most important tool in helping you sort through all the different ideas. So just think about, if you're trend following, you want to be earlier to the trend. If you are counter trend, you want to find stocks that are at the most extreme levels as possible. The highest scores are the ones that are most bearish. The lowest scores are the ones that have the most bullish potential. This is a great way to help you identify those opportunities so that you don't necessarily have 160 ideas. You really just have a handful of ideas out of those 160 that you really want to hone in on. And, our research that we put out every single Monday morning is hopefully giving you an idea of how you look for these ideas in addition to what you learned here today. And, how to structure a trade on the back of that. Please let us know kind of what you think about these sessions. If you like them more, I'm happy to do more of these sessions where we spend more time on the platform, really just walking you through ideas for today, walking you through ideas, trade structures. Today I just look at debit spreads and puts and calls. Maybe next time we might look at debit spreads from credit spreads and other types of option strategies as well. But the goal here is to basically help you better navigate this platform, get more value out of this platform, out of the subscriptions, so that you can effectively pay for the subscriptions with what you're getting out of it. With that, thank you so much. I hope you guys have a great trading day. I'll see you guys here next Thursday on our next session, or Monday morning for those of you that are joining me Monday morning on our next macro research session, which actually I just remembered, because of Labor Day, we won't be having a Monday macro research session on Monday. But what I will do is still publish the research and email it to you out on Tuesday morning. So you have all of that information on Tuesday morning to start your week. Thank you so much. And I hope you guys have a great trading day.